Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:45 p.m. As usual, New York style, fashionably late for the event. It is the 10th of February 2019 on an extremely cold, for us at least, extremely chilly here on the waterfront, here in the New Jersey, New York waterfront, and evening. This is a strategic webinar. I believe this one is going to be extremely critical and important for us to absorb and analyze, primarily because we are at a very critical juncture in the market. Not that the world is ending tomorrow, but we are, at least from a technical standpoint, as you know, as you can see behind you on the screens. Actually, did I fix the screens? Hold on. No, I haven't even fixed the screens. And here we go. Bingo, you guys should have that. We are seeing the live Globex futures on the E-minis, S&P 500 index futures. Globex futures have just started trading at 6 p.m. and now the Chinese markets have opened within the past couple of minutes, and we are starting to see a slight pullback in the form of this red candle here. We're going to go through all that in a couple of minutes. So on that note, Mike Harrington, I got to put this in. It says that Mr. JB, my good friend, says that he should be drinking muscle milk. Okay, that sounds good. Well, for him, beer, and a good beer is good beer, not the watered down beer, is a muscle milk. So I'll just give him that for now. On that note, let me make a couple of broad points, which are very important for everyone to keep in mind in the context of all the technical mumbo jumbo that we do. Is we are entering, as we always do, and every year is a critical. I mean, every week is some sort of like big event type of week, but this week is specifically important because of a couple of reasons. Number one, we still have the government shutdown impasse continuing. Keeping all the politics aside, they are still hammering around to figure out a way to avoid the government shutdown. And I believe that both parties, the opposition, the Democrats, and the ruling party, as they say in the third world, the GOP, the Republicans, and President Trump is trying to get his entire funding for the border wall, and the Democrats are resisting in some aspects. But I believe they will, one way or the other, somehow get to a meeting of minds where the funding will be funded to a certain degree, and that there will be no government shutdown. However, looking at the face value of what happened over the weekend, looks like the overall government shutdown talks, non-government shutdown talks, I should say, has collapsed. But that's just politics in Washington. And so the markets are down about 5 handles or 5 1/4 S&P E-mini points. So that's number one. So that's something we really have to watch for, because that is February 15th is the deadline, which is the end of the week, which also happens to be monthly options expiration. So we have a confluence of those things happening both at the same time. We have to be very, very aware of that. That's the reason why we live and breathe the charts. That's the reason why we had a phenomenal week last week based on multiple stocks which didn't really give a hoot about what's happening with China, trades, or anything like that. And that is my job, to present those opportunities to all of you so that you can stay away from the minefields of staying with companies or trading companies just for the heck of it, just because we know the names, which I shied away from on a large degree for the second half of last week, as you all know. And we picked up names which have very little to no correlation with China, whether they be the food and beverage industry, food industry primarily, whether it be the gaming industry, and those were our biggest winners last week, as you all know. And a quick reminder, you should all know, all you have to do is scroll down the Twitter feed and know exactly what we traded, what the ROIs, return on investments were, and what the charts are, and where we're going with those things. So that is called selective trading. That is what active fund managers do. I come from the background of Wall Street, as you all know, and any smart fund manager who is always lumping into the same things over and over again will never get anywhere. So that's it. Second point is the China, the big kahuna. or the big whale is the China trade talks. Treasury Secretary Mnuchin and our great, and I really like the guy, Robert Lighthizer, always have a difficult time with his name. Lighthizer, I can't even figure out like where the name Lighthizer comes from, is they're in China. They'll be meeting Vice President Premier Liu, who's a very pragmatic guy on the Chinese side, and they're going to be hammer out some details as to some sort of framework so that President Trump isn't forced to go out there and slap a 25% tariff. And let me emphasize, 25% tariff on $200 billion worth of Chinese goods, which our U.S. consumers consume. So that is not something will happen. I think they'll come up with a framework where the talk was last week that he will delay the 25% tariff as the talks continue. Do not expect, just like everything in life, some sort of beautiful Cinderella story where everything turns into a beautiful, happy ending. This is a case of real life world negotiation between two major superpowers, us being the stronger one. Economically and militarily, in my opinion, and they are going to basically try to hash something out. So that's the second thing. There are no other Fed speakers or anything like that this week, so we don't have to worry about Fed Chairman Jerome Powell with any press conference. He's been very good lately. He's been a good boy, hasn't said any stupid things, which caused some major market crashes. As we know, the market dropped 1,000 points when he talked about QT. And that is not a swear word out there in the Midwest. QT stands for quantitative tightening, as I've explained in my previous videos. And that simply means that draining money out of the economy in the form of a balance sheet reduction. And if you do want to find more about it, certainly scroll through my videos. More importantly, just go on Google, type in QT, and understand what it is. Instead of QE, which is quantitative easing, pumping money into the economy, QT is basically a prudent measure of fiscal responsibility, which means that they are sucking money out of the economy so we don't fall into a bigger and bigger federal debt. Our deficit already huge. Our federal debt is in the trillions. We cannot keep on going like that. Even though I believe that a sustainable deficit, which is covered by tax cuts, fantastic job done by the Trump team on the business tax cuts, on the individual tax cuts and such, simplifying the tax code, those things are very helpful, but we cannot keep on ballooning our deficit, and that is something obviously what the Fed is trying to avoid. Now, they can tell a government in power, the executive branch, to do what they need to do, but the fiscal branch, which is the Federal Reserve, will certainly try to manage the risk by sucking some money out of the economy, keeping interest rates stable to normal, raise it as necessary, So anyway, Fed Chairman Powell is not in the picture this week, so that's good. So, because these are the things that really royal. As traders, we have to watch this very carefully. As you know, include risk trading. In our service, I like to give a rounded view, so you guys are educated customers, like they say. You know, the old Sims ad, an educated customer is the best customer. Well, the same thing here. We are not dumb traders. We're actually very intelligent traders. And as intelligent traders, we have to know what the background is, mix it in with the technicals, and you're in a pretty sweet spot. You're in a pretty sweet spot. We just don't do things just because we are extremely bearish on the U.S. economy. We don't do things because we're extremely excited about the U.S. economy. We try to keep a balanced view, which is the most difficult thing in life to do, as we all know, because none of us are really balanced, right? There is nothing called a normal market. It is always a manic depressive market. Either markets are too happy or markets are too depressed. In between, we trade our charts to make scalable tactical profits. We call them tactical profits along the way. We take tactical shorts, generally biased long on the overall picture, which I will show, and I've shown many times, which are the longer term pictures and longer term view of what the technical markets are. So overall, that is still bullish, and whether it be the weekly, daily gets fluctuated primarily because of all the volatility. So that's it. So I'd like to just keep you guys all educated, keep myself a little bit more informed, and hopefully pique your intellectual curiosity as to why things happen. Now, without using too many $3, $5, $7, $8, $10 words, let me get straight to the point. Two things we got to watch out for this week. The government shutdown fiasco going on in DC. Remember, these things are completely out of our control. What we have in control are our charts, or at least have a semblance of what we might fall, what can happen, so we have a roadmap. And that is the only way a trader can survive. That's the only way an investor can survive. Because technicals overall generally tend to give an early signal of what might happen, especially the longer term charts. Here you're looking at a weekly chart in front of you, as you've seen many times. So I'll walk you guys all through that. So saying all that, that's number one. But on a priority basis, the real number one is the China trade talks. And I believe that they will, it's not going to be easy. There's going to be a lot of crazy headlines. Maybe good old Donald, my New York buddy, is going to get pissed off and say something, sometimes he says silly things. We all know that. So you might just, I hope he doesn't. And markets can easily drop 300-400 points. Boom, just like that. So the only way we're going to survive all that is trade management, positioning, and more importantly, just trying to follow the charts. Is that hopefully understandable to everybody? Yes? No?
Yes.
Okay, sounds good. I'll keep it in simple English so everyone can understand that. So, saying all that, we do have two economic pieces of data that's coming on the latter part of the week, and that is the inflation data, retail sales data. And those things are important because if inflation is too strong, i.e. the numbers on the producer price index, which is the cost of material goods that companies buy to produce their products, or the CPI, which is the consumer price inflation, which is the cost of a basket of goods. That's how they calculate it. When we, as normal people, we actually go out there and we buy our basic needs. So if that goes up too fast, if the CPI numbers flying higher, then obviously the markets are going to choke a little bit because they'll think that the Fed is then at that point going to raise rates more. We don't need a heated inflationary number. We need a moderate number which shows the U.S. economy is still growing, not slipping backwards. You don't want lower numbers on that. That means we're slipping backwards. So if the CPI number, I don't have the exact number in my head, is up 0.3% for the month, or 0.3% overall CPI rise, then if we come in at 0.4%, that's fine. All of a sudden, if it jumps up, 0.6 of a point or 0.6%, then obviously the markets are going to be like, whoa, hold on. I doubt that's happening. The only way, one of the reasons that happens, just so some of you know, who have been with me for a while, the two components of inflation. One is, this, by the way, is your economics lesson that you guys never took, or some of you never took in life, okay, or in school or in college, is the fact that if you have a strong inflationary number, that means that the two components of inflation are wage inflation, labor costs, and commodity inflation, which is the cost of gasoline, for example. Okay, so those are the two things which really drive inflationary things. Inflationary numbers higher. Oil so far has been within a range, and wage growth has been sustainable, going higher. But it's not like the Walmart guy, like I always like to say, with no disrespect to anyone, is not getting paid $100 an hour or $500 an hour like our great lawyer here, Mr. JB. He's getting there, $500 an hour from his clients, right? It's going up slowly, surely, and that's a great thing for the U.S. economy. We want wage growth to be sustainable, but slowly but surely. So, in my opinion, none of them are really going through the roof unless we have an oil shock. All of a sudden, oil supply worldwide shrinks, oil prices shoot up in the New Jersey, New York area. Let's say it goes over $4 a gallon. Then obviously we have an issue. Aside from that, we're okay. So that's your quick economic 5-minute elevator pitch on macroeconomics. Let me just put the monthly chart out here. Now we're going to get into the technicals, and let me walk you guys through to what I expect is going to happen this week. And this forecasting business is tough stuff. There are guys who get paid $10 million a year and they're dead wrong all the time. You guys see them on TV a lot, and they never made you guys any money. On our service, we have shown ultimate charts, which have told you where the markets could drop to, what the probabilities are, where we could rise based on our basic technicals that I'm showing you here, and the more complex technicals that I personally monitor. I come up with a forecasted opinion of what might happen to the markets, and we've been pretty damn good. We should be getting paid $10 million a year, so I could actually distribute the money over to all my loyal members. But you know what? So we still keep on doing what we do. So our forecasting is pretty damn good. It's up there. So a lot of the talking heads out there, you wonder why they get paid so much for being wrong so many times. That's life. Let's start off with the charts like I always do. It's a short-term trading chart. This is more of a day trading chart, generally called the 15-minute time frames. Each of these candles are 15-minute candles. These are the ones that make traders jump around like monkeys on a hot tin roof, and they keep on doing stupid things because the algos or the algorithmic, high frequency trading programs are known to play havoc with specifically intraday, play havoc with the buy and sell programs. They don't have a reason, they'll just do it. And then if there's reason, like a tweet comes out of President Trump, or a Chinese premier says anything, which actually doesn't. You notice he doesn't really say much. Because generally speaking, the Asian culture out there, they're more subdued, right? They'll do tough stuff, but they're more subdued. We're like the ones which are the vocal ones, squawking all the time. So bottom line is that the volatility in the markets on a intraday basis are shown in the form of each of these candles, which are 15 minutes. So if every 15 minutes the markets are overall volatile, as you can clearly see, you can trade them to a certain basis. I'm not a 15-minute trader. I can't do that. And I'm fast. And I'm really fast. But I am not going to push my 3 brain cells that's left in my head to trade every 15 minutes. But I will look at patterns. I will look to see if there's any major of these violations of each of these lines, the support lines in red, the resistance lines in green, which are the upside lines. So if we're getting close to some of them and keeping it real simple, this is the 6th grade version, guys. All right? Keep it simple, stupid. The KISS principle. So if I'm getting close to it and stuff, I'm going to take a profit. If I'm starting to see a big breakdown, I will go short. And that short might last 30 to 45 minutes. So this is really a day trading chart. We have all types of traders in our group. We have day trading traders, we have swing trading traders, we have a combination of both, and we have traders who basically look at it long term and say, listen, charts are looking good long term, which we're going to slip through in the next couple of minutes, which are the dailies, the weeklies, the monthlies, and we're going to just sit there. I'm going to throw some money out there, buy some strikes up towards the upper resistances, the upper levels, and I'm not going to worry about what happens during the day because I have a really busy day job to do. Not talking about myself. My busy day job is this. That's the reason I keep you guys updated literally every 15 minutes throughout the day. I don't think any other service does that. And not only do I keep you guys updated by stupid one-liners, I keep you updated by a visual representation, what we call tactical technical charts. You cannot get any better than that. Now, trading these candles is tough business. But at least we know what the levels are. I structured these charts well ahead of what's going to happen, as you know. It's not like I do it after the fact. So at least you know when you need to bail, or when you need to put that little short out, or when you don't, when you gotta just look away from the screen and walk away and say, okay, this is standard stuff. I try to put 1 or 2 lines of very critical comment, as you'll know, precision comments relevant to what's going on. And I do use terms like uptrend, intact, and stuff because I keep on looking at my longer term charts. But coming down to the day trading part, a lot of money can be made by trading these charts. And all of you know that. So if you have time, and you're looking at this at my charts, you're looking at your own screens, then the 15-minute charts, this is another 15-minute chart, which has a bigger picture going back to the government shutdown deal, the first one, going back to the 25th of January. Yeah, 25th of January, which seems like, years ago, right? It was only 2 trading weeks ago. You can use these charts very effectively, very effectively. However, they are volatile, and if you do not have the time, don't bother looking at them. Next. So, going back to it, as I explained, the way to read these charts are quite simple. We have a new member here, Drew, great gentleman, who is starting to dip his toes on the technical side of trading. So I'm going to explain some basic stuff here. So we have ranges. They're all different types of trading, and that's not something you learn in one day, but the way, if you stay with Clue Estate Trading, you take the advanced coaching sessions, you look at the Twitter feed during the day, or at the end of the day you scroll through, you will have absorbed more material about the market and understand the market better than you would ever have. And that's the only thing I can guarantee, than you would do on your own, which would take you 2 years. So instead of 24 months, you can actually understand the market a lot better within 24 days, if you ask me. But you have to focus on the charts and try to understand it. That's all. So saying all that, there are different things that we're looking here. We're looking at ranges. So let me get the highlighter, the pen, I should say, on this case. So these are the ranges, right? And you notice that even when on a horrible day like Friday, like, oh my God, markets are down, look what the market did. It fell within a range. It touched an uptrend line that was drawn well ahead of the game, not after the fact, right? And that it touched it exactly. You can't get any better than this. Then it created a small hammer. And certainly, I don't want to spend time explaining basic stuff. You don't know what a hammer is? Go to Home Depot. Well, better than that, go to my Google YouTube site. Go to new member intro videos. I think it says new member introductory videos. Yeah. There's a whole thing on candlestick patterns. Go to Google, type in candlestick patterns. It looks like a hammer because it's got a tail. Sorry about that. This computer's a little bit sticky today. So you got a little tail right there, and then a body, which is the upper end of the hammer. So that's a hammer reversal. This is a inverted hammer. Like I always like to say, like, when you drop a hammer, don't do that on your head, unless you want to do it. I don't know. Wear a helmet. You drop a hammer, the heavy part of the hammer, the head, the metal part is always at the bottom, and you have the handle, which is the tail. So that's an inverted hammer. That's a hammer reversal. That's a minor inverted hammer right there. Anyway, I don't want to get into it. I promised myself I want to get into candlestick patterns. You guys, you got to at least have the basics to understand what's going on. So saying all that, we have the ranges. We have uptrend lines. We have something called a megaphone, which you don't have to worry about. That's my job to figure out. A megaphone simply means if really, like we say in New York, shit hits the fan, then you are going to get down to 26.36 and you're going to make a crap load of money because these levels are going to break real fast. Now, what happens with markets are that each time each of these support levels, the red lines are hit, the market tends to stop, pause, not stop, but pause. And that's where, if you are short, let's say you buy some SPY puts at 80 cents, which, by the way, didn't work out on Friday on the hedges, on the SPY puts. Now, when I put out hedges, something you got to keep in mind, it doesn't mean you take a bulk of your money in your portfolio and put it in there. You just buy a little bit, just in case it doesn't. Well, guess what happened? It hit this level and the uptrend line, close to this level, an uptrend line, and then it just bounced. And the markets were down, what, 300 points or 200 something? And we ended the market down 63 points at the end of the day. So sometimes you're like, why is that happening? Well, there is an answer. And the answer is, look at my charts. It really is. So looking at just the price movement on the major indices like the Dow Jones Industrial Average, S&P 500, NASDAQ 100, or the Russell 2000, or the Qs, or the SPYs, or listening to the demons in your head, or listening to the CNBC idiots, or Fox Financial News idiots, or Bloomberg is generally a little bit more intelligent, it's never going to do anything for you guys. Never. And you guys know that. It is all have to do with technicals. Any particular reason why we turn like that on Friday? Not really. Aside from the fact that it hit some technical levels. So bottom line is that so here we are. So let me just go through the thing here. So you got ranges. This is a range. This range is, I don't know why the cursors are a little bit slow. It's 2674 to 2792. Now these things you have to write it down somewhere. I know traders are lazy, they don't want to think, but that's okay. But that's why in the service, just buy my freaking alerts and just sit with it. And most of the times, you're gonna make money. All right. So that's one easy way to do it. The other way to do it is you mix that in the easy way with understanding the charts a little bit, and that's a smarter way to do it. That's why the reason why I like to educate my members as much as I can with the few kernels of knowledge that I've gathered over the years. So if something goes from 2674 to 2792, simple math says that's 18 points. Right? So 18 points on the S&P 500 translates into roughly a factor of 7, 126 Dow points. Now, I've mentioned these things hundreds of times, and some traders still don't get it. Now, if you don't get this type of conversion of what one S&P point is roughly 7 Dow points, you are going to be, you're just not going to do it. You're not going to make it. Don't bother paying me the measly sum of 70 or 90 bucks a month to get killer trades. Just don't be a trader. If you don't know the conversion between S&P 500 and E-mini, which is similar to S&P 500, give or take a couple of points, and the Dow Jones Industrial Average, you do not, in my opinion, have the right to be a trader. Serious. So, saying all that, the 126 points is based, so this range is 126 Dow points. Now, somebody out there says, ooh, we're done 126 Dow points, like many talking heads on CNBC, especially the reporters. Oh, we're down 126 points. Technically, we did nothing. All we're doing is we're coming back to the bottom of the range. We are looking at this pattern, and that's another major component of visual trading. This is visual trading. You don't need to be a technical genius. I'm not showing you, what do you call it? What's the word I'm looking for? The term? It's going to come to me in a quick second. It's a correlation. It's a statistical analysis term. So I'm not showing you like all types of different correlation numbers and, like a lot of technical services do because they're so smart. Because I'm not that smart, trust me. My charts are very smart. And I have a great feel for the market. Like good old Donald Trump likes to say, get a feel, Mr. Powell. Feel the market. Feel the U.S. economy. Guess what? I feel the market. All right? So we're not looking at coefficients. We're not looking at this and that. We're showing you visually where the levels we can come to, where we can bounce from, and there is where we make the money. So this is where the last big surge started. Not last, but one of the intermediate term big surges started. And I was expecting the market to come back and test that, but it didn't. It touched along the way. It hit a major support level. That is this downtrend line. And that downtrend line caused this. And big reversals happen. Multiple big name stocks like Apple and Netflix went from being down 3, 4, 5. Netflix was down, 7 points to going positive. Big options money. Intraday, you could just take it at the end of the day and say, okay, I'm done. Fine. There's no harm in cashing out stuff at the end of the day. Maybe leaving a couple of small positions out there. Just make yourself a day. You feel good. You feel smart. And the more smart you feel, the better off you'll do. because traders who feel really stupid about what they do repeatedly generally are going to make another stupid trade. That's just behavioral psychology, as you know. So you want to feel smart, you say, oh, look at this, I bought it here. He put an alert on Netflix, which I did. And then before you know, I had the 360s going, the 360s Netflix options, going into next week, monthly options expiration. They were $1.09. I think at the time that I put the alert out, they were about $1, maybe 40 or so. They almost went to $3. You could scalp in between and take 70 to 80% down. How long did it take? An hour? Sure. I don't have anything to say. I mean, really. Is it going to be, was it back and forth during that hour? Sure. But it never broke the level. And I showed the Netflix chart repeatedly. At least I think twice on Friday. Apple did the same thing. I wasn't in Apple. Apple went from being low, I believe the low was 168, went to 170. That's a lot of billions of dollars that went into Apple off at the 168.42 level. And the stock went to 170.66 and closed at 170.37. We traded Apple options. So all that is directly tied in. Those particular type of companies are kind of have more correlation or linkage with the overall S&P 500, not the ones that we made a killing on, which some of you, if you don't even know, that means you're not following anything and I have nothing to say. But say, I'm really sorry, guys, for you guys. Can somebody name one of the biggest winners we had over the past 48 hours on Thursday and Friday? A lotto that was up 2,000-3,000% or more. I don't have all night to waste, guys. So with all due honesty, and I'm a nice guy, but I need some answers quick. You guys can hear me. So if you don't know, just stay quiet. If you do know, just say it, please.
PCG.
No. That means you never looked at my Twitter feed. So Tom, that's not,
No, okay.
PCG was a nice winner. And PCG is still going. But it wasn't the, seriously. Okay, JB. Well, JB's not really been active with trading, so I'll let him go. Mike. Come on, guys. Can you hear me or not hear me? Trying to help you guys here. Okay, forget it. Drew. You said.
All right, so I said it was So PCG broke my heart.
No, Drew. I'm not asking for a long-winded answer, and you got to fix your mic. Okay, I'm asking for a straightforward answer. It is not PCG. It doesn't matter what trade you did. That has nothing to do with what I deliver. Because traders have a tendency to personalize their trades. Okay, I did this, so I feel good about that. Okay, that's all fine, good. I'm happy for you. But what were some of the biggest trades that we did last week in the month between Wednesday and Friday? And this will show a major point. Not show the point that you guys are not focusing, but it's going to show the apathy in the market. And I repeatedly said those trades. I'm not mad or anything. Actually, what right do I have that you guys didn't do it or whatever? But I just need to, So Drew, which PCG you're going to say? I cut you off. So do you know?
Yeah, I don't know.
Okay, good. So this is a classic point of what I'm talking about: complete non-focus with members. I know some members who are like, boom, focus. Because I repeated many times. The biggest winners that we had, which I repeatedly even showed on the charts, where options went from 40 cents, 20 cents to $4 to $5. That's big money, even with small amounts of money. Was Electronic Arts, was Grubhub. Two of the biggest winners. And then on the earnings side, we had Mattel. And on earnings winner, we had quite a few. We had the biggest winner ever, which no one even bothered mention, was Chipotle. No one talked about that. So the point that I'm trying to make here, guys, all right? And this is a very good exercise in non-focus is focus. That's it. PCG is going to go quite a bit higher in my opinion, but that's not, it's not that I was looking for an answer. I just needed to know. The biggest reversal trade, these were reversal trades, was Grubhub, which was down 15 points, almost went positive the same day. And then we try to pull up a chart. And Electronic Arts, which was down, and reversal trades are some of the biggest trades ever. So let me get this. This line was there because I was showing this chart. So there, stock was 66 at 9.45. We started buying it on the reversal. The stock went to $85. The options went from 40 cents to $4. And no one had the answer. Am I going to use the word shocking? No. I'm going to use the word complete non-focus. And if this was a football game or a basketball game, the coach would fire your ass out real fast. All of you. Seriously. All right? So, other people who are going to listen to this, they're going to say, this guy's like a real jerk. I'm not. Because I, like I said, work like a Honduran, Guatemalan, Mexican, whatever. Congolese, I'm an equal opportunity blaster. I'm just kidding. All right? But seriously, I work really hard to help you guys. Really hard. Not a single person in the chat room. That's actually good news. From a behavioral standpoint, that means the market's going a lot higher. And it gives me more time not to respond to questions and focus on delivering the goods on the real-time Twitter feed. But if you are not, so I work really, really hard, guys. Through ugly markets especially. That's when I really work hard. Because on a good market, when it's not volatile, everyone's a friggin' genius. But on a bad market, opening down 400 points, that's when my real strength comes in. So what I'm getting at is real simple. I ain't your daddy, I ain't your mommy. All right? It means all of you who's going to be listening to me, whatever. I'm just a trader who's trying to help you guys in delivering some pretty phenomenal performance. So just focus a little bit harder. That's all. It's going to help you. Not me. It's going to help you guys. So Grubhub was one of them. You can see that very clearly. That's a 5-minute chart. This chart could have been day traded, which we did. This chart could be swing traded, which we did. And still long. Why? Because if you look at the hourly chart, forget the hourly chart, look at the daily. So this is when it comes down to it. I asked new members, do you really follow my Twitter feed? Yes, I do. I'm not picking on you, Drew. I'm just saying, I'm actually picking on nobody because I'm trying to be a real coach here. So, yes, I do. Well, obviously you didn't. Other members, if they're busy during the day, everyone has a day job. Most people do. Then look at it at the end of the night. Anything that's going to help you make money. If somebody was giving you $100 bills and said, listen, at the end of the evening, after the family is in bed or the kids are in bed, you take the dogs for a walk, you just take a look at it. That's going to help you the following week. And I mean, the following week, that $100 is going to come in your hand. I'm sure you're going to say yes. It's just the same thing. So let me get this line out because that's a 5-minute type of line. So when people tell me that, I say, why don't you tell yourself whether you're focusing or not? If you don't have time during the day, do it at the end of the day. It takes 10 minutes to scroll through, 15 minutes maybe max, to scroll through my Twitter feed. And everything is there. You can see the killer trades. You can see the ones that, I'm trying to get this line out of here. So that's it. This was a good example of non-focus. Okay, so let me just get this right. 1 hour. So let's look at the daily of this. So here is where we were buying. Not at 66, but when the reversal started. This is one heck of a hammer reversal. If you don't know how to trade reversal trades, they're the most profitable ones, guys. Because a reversal trade is when the shorts are screaming in pain. The day before, Chipotle exploded. So let's say you were too scared to do the earnings. Understood. What about the next day when I said buy the Chipotle 600s? They went up about 200% during the day. I can't change what's in your head. You guys all had some money to buy something at $1 or $1.50, which went to $4. So I don't want to hear.
Also have
By the way, Drew, straight out, unless you fix your mic, I can't take your questions. I'm dead serious. You have to fix your mic. It is absolutely horrible. It comes like garbled. I've mentioned this to you before. You have to fix it. Please, because I didn't even know what you just said right now. So let me focus on what I'm saying till the Q&A session comes, and you can type in your questions right in the box, so it's easier. So bottom line is, you see a monster, and so now is the trade over? Not in my opinion. That's the reason why I said it's still a swing. So you see a monster reversal like this, which during the day looks like this. What do you think is happening? $10 billion worth of shorts getting covered, or $4 billion, whatever the number is, getting covered. You think they're just going to go away and die? The stock is going to crash? This is Grubhub we're talking about. So as I was saying, Chipotle delivered amazing results, which no one knows, but I knew the stock was going to do something good. I showed you guys on the chart. Chipotle has been a long-term trade since $250. The stock is hitting 600 plus over a bunch of months. We have been trading it selectively as it's moving higher. I don't give a crap. Or some traders say, oh, I don't eat at Chipotle. Well, who gives a flying? Shit, whether you eat at Chipotle or not. I maybe have Chipotle like maybe once a month because my son likes it. So the thing is, it doesn't matter. First of all, I said from day one, look at my video from way back, mock Chipotle and then market charts and all that stuff months ago, where I said since Mr. Nichols, Mike Nichols, I believe is his name. I know his last name is Nichols, came from, he's a turnaround specialist. He's what makes America great. One of the finest brains in America in restructuring. He turned around Popeyes, right? Popeyes, Kentucky Fried Chicken, between money-losing ventures to killer stuff. Oh no, Taco Bell. Came from Taco Bell. And I said that time, this guy's going to do great things. You think these guys are idiots? You think they're just waving around flags and wearing red hats? Make America great? Look, talk is cheap, guys. What makes America great, in my opinion, and I'm a hardcore Republican, is hard work and smart work. All right? And that's the kind of guy that we need. And that's the kind of guy who made his investors billions and billions and billions of dollars. So right after Chipotle, when I said, okay, Taco Bell, he's going to do great things, the stock started going up. Then it pulled back. Some rat fell from the roof or whatever. There was an E. coli crap. Didn't matter. Chipotle's business is exploding. Their margins are exploding. So why am I showing Grubhub with Chipotle? Because Grubhub contracted with Chipotle 6 months ago for their delivery. The delivery business is going nuts. Nuts. All right? So wake up, guys. Doesn't matter whether we eat there or not, whether we like the guac and whether we like this and that. They're changing the menu, the breakfast menu, the vegan menu. Like, I'm not even a vegan. So bottom line is, stock exploded. Grubhub, we made money the day that the stock was going higher, and then the stock collapsed. That looked like a blood red candle. Then it started turning around. Technically, boom, went in. Told you guys to buy it. Not that anyone remembers. So goes higher and explodes. Massive short covering. This is where the shorts go to die. The bears go to die. Because their conference call was very positive. And now the stock is on its way. So let's adjust some charts here. And the stock most probably, in my opinion, will go to $100. So, okay, you guys were all non-focused and didn't look at it. You still have money to make. Is it going to be in a straight line like it happened on Friday, Thursday and Friday? No, I don't think so, but what the heck do I know? It could be. Maybe there are more shorts in there who are ready to not lose any more money and their clients' money and they need to cover because they're short and the stock's going higher. So they got to cover. They got to buy. So great. It's it's still got juice. So 1 second. And the juice gets exhausted at the gap fill. There's your gap fill. And I showed that on my charts. So if anyone comes to me and says, oh, I really follow your Twitter feed and stuff, well, don't bullshit me anymore. All right? Just for your own self, look through my Twitter feed, look at the charts, try to understand what I'm saying, and go with it. Thank you. Am I angry? No. Am I disappointed a little bit? Yes. All right, let's move on. So that's what I showed as ultimate destination. At 86 to 100, said, oh wow, it's going to go up another 15 points after it went up like 20 points. Yeah, sure it can. Will it hit roadblocks along the way based on these resistance lines, which are the last supply points or sell zones? Absolutely. 90, 95. Unless there's a complete bloody red candle on the daily that takes out this moving averages, this 50 and the 34, which are starting to curve below 78. That's a short. That's a short. Aside from that, should be going higher. And the calls are cheap. They're not like $18, $19 like frigging Amazon. They're like $1, $2. You can do it. You can buy 1, 2, 3, whatever. All right. The other stock, which none of you gave me the answer, is Electronic Arts. Whoa! The stock hits rock bottom at 77, collapses. We were long EA earnings. The basket strategy, which you remember. You buy like one call, whatever. You can buy half a call, right? Like, oh, excuse me, can I buy a quarter of an option call? No, I'm sorry, they don't allow that. Okay, so gotta buy £1, so you buy one call. Nothing crazy, $2, $3, $4. Stock collapsed. Started to turn. Because Fortnite was their Fortnite, they didn't, they started to miss some numbers. And then some other frigging game came out. I forget the name because I'm not a gamer. And that had 10 million gamers within the first day. It took Fortnite, which is, I guess, the biggest selling video game for EA, Electronic Arts, over the past year or so. It took them 2 weeks to get to 10 million players. It took 1 day for 10 million. Boom. Does this look like a stock that's going into a bear market? Another great one that I said buy and buy for next week. You can extend it as you want. Because at this point, and I have more detailed charts on it on my Twitter feed. So instead of giving me a story about, oh, you really follow my Twitter feed and stuff, I don't want to hear that crap. Just go through it. Look at it. It's going to help you make money. The stock looks like it wants to go into at least 100. That's $3. That's good enough for a nice options trade. But looks like it wants to go to 100 to $110. But look at my other charts, which I'm not going to bother showing here because it's your job to go look at it. Because I've already did my hard work in the middle of a very volatile market, putting out those charts with the levels, blah, 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 all kinds of things. So, back to the market. So these were the two biggest winners. And of course, Chipotle. Not that anyone remembers the chart because they don't like burritos. Neither do I. Hello. These charts were drawn months ago. Look what the stock did. Hit each of these levels. This is a stock chart of Chipotle going back to March of 2018. It's a long time ago. That's a year ago. And now we are starting to enter a level. Well, that was actually a wedge. Hold on 1 second. I think I got to show you guys the weekly. The weekly. So the weekly chart for swing traders, stock's going higher. Stock's going higher. This candle is telling you it is broken away. And if you look at their numbers, you look at their margin expansion, you look at what they're doing, it's going higher. The analysts were all over it. So saying all that, I don't know why this is looking like this. This should be straightened out. 1 second. This is not rocket science, guys. The rocket science is your brain. Try to figure it out. So here, 500, that's a channel, wide channel. Upper end of the channel is 670. Chipotle, by next quarter, is going to $670 in the next 2 months or 3 months. It doesn't give a crap about whether whether the Chinese are cheating from us, stealing the IP patents, whether good old Donald is tweeting at 6 in the morning, whether the government shuts down. Well, that does have an effect, but do you think the government shutdown is going to have an effect on Chipotle customers going to the stores? They'll probably eat more. These are the things, what we call not market resistant, but somewhat market, not non-correlation with the market, but low correlation with the market. So technically speaking, this is a weekly chart. Technically speaking, the stock is, I said it was going to go to and please, I don't want to waste my time. Honestly, I don't, because I have multiple charts of Chipotle that's on my Twitter feed. Please look through it. So, so at least looking at this line that was drawn way back, it was actually drawn back in April of last year. April of last year. It looks like the stock has another 30 points in it. That's pretty good. 30 points. I'll take 30 points. You buy some options, maybe 620s. I have it out there. Showing to you guys. It almost went there on Friday. If the market wasn't down on Friday, we'd have gone to 630. Because now the idiotic analysts are now all scrambling to raise their estimates on the number and their price targets. Now anything can happen. There could be an E. coli breakout. There could be a rat falling off, one of their stores. There's always hedge funds and a lot of other shorters who'd like to spread rumors. Now, if it's a real rat, then the stock's going to be down 20 points. So you got to buy that dip based on the charts. So this was another huge winner. Now, this is what it looked like after earnings. The calls were expensive. $12 calls, which were in the money, the 550s, close to the money, went to $57. So a $1,200 outlay for an option that's one option, $1,200 is actually pretty expensive, went to almost $6,000. But what if you bought it out more, like so you bought the 580s? So anyway, let me tell you. So the next morning, and I'm not even bother asking you guys anymore right now. I went in there and I said, okay, when the stock had pulled back to about 575 from here, I said, buy the 600s. Within 10 minutes, the stock turned around and started running to 606. After pulling back at 9:45, 10 o'clock, it was 563. Now, you guys are options traders, right? You guys do trade in the market, I'm sure. No sarcasm included. All right? So if you're seeing a reversal like this on the 15-minute chart, and I'm telling you to buy the 600 calls, each one of these candles is 15 minutes. Within 15 minutes, those calls doubled and tripled almost. So you don't need to be all the way here. You could sell the fat in the middle. If you want to be an options trader, you got to trade charts. You chase prices, you're dead. You got to look at the charts, and if the prices correlate, you go with it. Is it easy? Not really. Is it that hard? No. You know what's hard? Being a data scientist at Google. You know what's hard? What Mike Harrington's son is doing. You know what's hard? What my son is doing in college. That's hard. What we do, we just need to use our brains a little bit. And more importantly, our cojones. All right? Our mental amygdala. We need to be risk takers. You want to be like all, fine. Don't be an options trader. Don't. Buy 10 shares, 100 shares of Walmart and just sit there forever. Even Walmart goes up after earnings sometimes, big time. I'm telling you the truth, guys, all right? I'm your friend. So, and sometimes you're going to get hit. So, don't personalize your losses. Read some of the motivational articles that I put out there. You think that's a joke? I mean, not me putting out the articles. Read that article, Turning Negative Emotions to Positive Motivation. That's what I do every single day. I learn from my losses and I run and I learn from my winners. I never get overexcited. Because every stage that you guys are in and I'm in, we can only get better. And you will get hit for no fault of yours. Read those articles. For no fault of yours, some volatility thing, one tweet out of Trump, one tweet out of this, that, forget tweets, like the other real stuff. Like Fed Powell say making stupid comment, market down 600. You're caught. Okay, understood. So what do? You personalize your losses? Never, ever personalize your losses. You know why? Because the market doesn't know you. So why are you personalizing your losses? It's not like your girlfriend dumped you, or your wife left you, or whatever, whoever's listening, like your partner left you, or your dog said, you know what, I had enough of you, I'm going away to the shelter and somebody else can adopt me. That's personal. Trading, never, ever personalize your losses. Now, why am I so adamant about it? Because I go through it all the time. I am not a bullshit artist. I'm telling you the truth. Never personalize your losses. Take the loss, get out of it. Get back in the same trade if it's moving the other way. Only then will you grow your account. You start personalizing your losses. I think I said that like 9 times in the last 5 minutes. When you start personalizing your losses, that's the 10th time, by the way, you're done. You're done. So stop being a wimp, because none of you are wimps in real life. I don't think so. You're all tough guys and tough gals. So why can't you be tough in trading? Because trading makes human traders, especially algorithmic high-frequency trading, the way the markets move, makes human traders into wimps. Wimps. It's made me into a wimp a couple of times, but I fight back. Because I don't want to be a loser in life. I don't want to be a loser in trading. Because none of you are losers in life. So why do you want to be a loser in trading? Not going to be a genius in 1 week or 2 weeks. Yeah, it's going to take some time. All right, enough of the psychology, but you know what I'm saying. Stop being a frigging loser by sitting aside and not being focused and missing out on some of the biggest trades given. End the story. So these are very powerful moves. Very, very powerful moves, guys. All right. On the daily. Boom! Think it's a joke? It's a pretty chart. That's billions of dollars, like getting squeezed. More importantly, new money entering. There's an old saying, which most of you probably don't know. It's not where stock is coming from, it's where it's going. Let's focus on where a stock is going. Let's not focus where it came from. Okay, you didn't buy it at 400. Okay, you didn't buy it in 250. Who the F cares? Focus on where it's going. You're not mom and pop, meaning completely ignorant guys waiting around for Kramer to tell you what to do. You are getting some of the finest technical suggestions, not advice, suggestions on what to do. Take advantage of it. Please, for God's sake. We're in a bull market with corrective pullbacks. And every time the market pulls back 400 or 500 points and bounces up 600 points, you don't take advantage of that. I don't know what to say. Now, you just can't buy the market just because it's down 600. If technical levels are breaking below the 34 and the 50, for example, here on Chipotle, you short the crap out of it. That's technical. Now, if you had to do it on your own, okay, you'd be lost. I understand that. But you're getting real-time alerts. You're getting real-time charts on the market, individual stocks. So go with it. All right? Wake up. And I know many of you are woken up because I get texts from traders and I know exactly the ones who are doing well because they're the ones who are liking what I'm putting out there. And I see the like who liked what. I know exactly. Digital technology lets you see into the minds of the traders and what they're doing. Okay, fine. Enough of that. So saying all that, this is a more room to go. Back to the markets. So here we are. Look what the market did right now. Now, I'm not waiting here. I'm not a kid. I'm 50 plus years old. I'm probably 70. I got more energy than a 20-year-old or all of you guys put together. All right. So saying all that, and I hope God still keeps him giving the energy, because God is only one who takes care of us, believe me. So bottom line is that look what happened here. The markets came. Here's your megaphone. Look what it did. Did I twist the market like I'm going in there behind one of my monitors and saying, okay, market's going to just bounce from there? No, my charts are doing it. Look at this. We were down about 5.25 points, whatever. Like I said, look what the markets did. This is the power of tactical charting, clueless a trading style. I don't think I'm sure there are people out there. There's a lot of smart traders out there, a lot smarter than me. I ain't smart. I'm damn smart when it comes to charts. Okay, look what it did. Here's your downtrend line or the upper megaphone, and it turned exactly from there. Do you think I can make these things up? Now, is it because I'm a genius and I drew that line? No, all I did was draw a downtrend line which touched multiple points. You can do that with any stock. So now if it breaks here, it's going to come and retest this level. If it breaks that, it's going to retest the uptrend line again. But just as we were speaking, and this is not the first time, look what it did. Came back, retested. So as a trader, E-mini traders who trade off my charts, we have a bunch of, not that many, but we have a bunch of traders who just trade the E-minis, the futures, and they use my charts, and they're never in the chat room and stuff. These guys are like been there a long time, and I talk to them once in a while, maybe once a year, and the guys go, you know what? Love your charts, man. Been trading the E-minis of this and their own style. Everyone has to have their own style and their own thing. And I'm like, just love this precision. I'm like, thanks a lot, buddy. Thank you. Just be a loyal member and hopefully give some referrals. So that's what they do. So right now, they just made 4 points because the futures are going positive right now. They made about 4.5 points just on that move. How nice. So that's it. Now, longer term charts, let me get to it. This is a swing and a day trading chart. Why is it a swing chart? Is because it goes all the way back to some major inflection points, which is, I gotta scroll back here. There, which is the government shutdown deal. That's when we spike back on around the 25th of January. And then we have so it spans 2 trading weeks. So I would look at that as swing chart because you are seeing it as a broader view. Is it a day trading chart? Sure, you can day trade at this chart because each of these levels and stuff, you can trade. But I look this as more of a swing chart mixed in with a day trading chart. And this swing chart is telling you, what is this there? That's a blue arrow. I'm sure everyone understands that. So if this is the blue arrow, what it's telling you is that if we break above here, and if we break above 2716, the next level of pattern symmetry, right here, this is pattern symmetry, is 2726. So what do I do as a trader? As we get closer to here, I will be getting out of my S&P SPY calls. It's not rocket science. Do I need to repeat everyone? Sound really stupid and repeat what I said? Rocket science is working at Google, working at Dana-Farber Cancer Institute, working where Mike's son is working. Even being a lawyer is not rocket science. You know that, JB. So what do you call? This is just basic chart common sense. Understanding patterns is important. It eventually comes. The more you look at charts, the more your brain, the layers of your neural networks basically say, okay, now I see the patterns. Now I see the patterns. Just the way many of you are great sports guys, sports fanatics, and you can see certain things, different players, and you can bet like whatever. So charts are the same way. The more you look at it, the more your neural footprint on your brain, and you start to see. So saying all that, what do we see here? We see an inverse head and shoulder. There. A little bit of resistance here. Probably pull back. And then first pattern completion. Second pattern completion. That's how you trade the SPY calls and puts. Now, if we hit this level here, where we broke down, had that mini flash crash, we have to watch out. If we start to see big red candles that appear here, and you guys will be seeing this first thing tomorrow morning, obviously, and I'll be updating people, then you want to go a little short. Keep in mind that we have a megaphone pattern here, which we can bounce off. But if we break that, we have a pretty good shot at hitting these lower levels. Now, each of these levels, by now, you should know one S&P point or E-mini point is roughly about 7 Dow points. So if we drop from 2709 down to 2700, that's 10 points. 10 points means we can drop easily 70 points in the Dow. While the world freaks out there, oh my God, we're down 70 points on the Dow, all the algos are doing, and this is the reason why some shops, hedge funds and stuff, who have the really smart artificial AI intelligence driven algos, not all algos are like a bit like humans. They're really stupid, they're somewhat stupid, or they are smart or very smart. So some algos are very smart. They kind of predict what the other algos are going to do. Believe me, I know, because I have some friends back from my old days and somebody we as close family friends, they write algorithmic programs for some of the bigger firms. So some of them see what the others are doing, and they artificial intelligence, they quickly on the fly change the programs. And so we don't need to be that smart. I don't want to be that smart. Believe me, I want my son to be that smart, but I don't. Okay? My charts are showing you the same things in a visual form. And that's powerful. So saying all that, I'm looking at patterns. So if it moves here and I start to see a large red candle come in, I will, and it breaks this, I'm going to say, okay, let's buy some SPY puts. That's on the short-term intraday trading side. E-minis right now are flat. And that's the reason why we're here. Now, this is live, as you know. This is live happening. The world is awake. So now let's take a look at the 1 hour chart. Now, this is a chart that anybody who doesn't have that much time to follow the 15-minute chart can take a look at it. This is very clear. We went up, volatile, right? Went up, but very nicely. And then we consolidated. This consolidation pattern since Tuesday freaked the living daylights out of everybody. Great. We're not just trading the markets, we're trading killer stocks, which have low correlation with the market, whether it's Chipotle, whether it's Estee Lauder. Don't need to wear makeup from Estee Lauder to trade Estee Lauder, right? EL, another big winner. Another big winner. Grubhub. Even Yelp went up. Slowly but surely. PCG. Slowly but surely. What was another huge winner? Oh, I'm not going to ask that because I'm close to being tough. 12 push-ups away. Do mental push-ups, Drew. Your muscle's not going to make you money. Your brain's going to make you money. So if you're doing 12 real push-ups in your brain, then I would say that, that's what he wrote, okay? So trust me. Physical brawn doesn't make any money for you in the markets. So you can be the toughest guy in the world and lose a shitload in the stock market. Thank you. All right. So 12 mental push-ups away. All right. Good. This ain't CrossFit here. This is mental CrossFit. All right. Let's move on. So another huge winner for us was something I said to buy because I heard Bill Miller say it, the great fund manager. Cody. I didn't even know what Cody did. COTY. They were up 362%. These were cheap calls. Anyone remember the Cody trade, COTY? It's still on, by the way. Not that I'm going to ask anybody. Another beautiful stock. To show you a quick snapshot, please go through my Twitter feed, please. So Drew, oops. That was kind of funny. He wrote, I'm close to being tough, 12 push-ups away. Okay, that's the reason why I said what I said. All right, let me get to my points. Normal dry mode. Okay, so let's put COTY. So look at this baby. This is a cosmetics company. This is like a $700 stock going to $933, or a $70 stock, just pure law of numbers, or a $70 stock that is heading towards 10 or 11. I have multiple beautiful charts on Cody and what options you need to buy. The 7.5 calls, and we had the 7 and the 7.5 calls that I asked people to buy. They were 60 cents. They went to almost $2.50. The ones which were 40 cents went to $1.85. That's like a $4 call going to $18.50. That's like a $40 call. Not that I like, I don't buy $40 calls, but still going to $180, up 362%. The February 15th. Another stock that I highlighted that no one bothered, like I shouldn't say bothered, but remembered. Focus, guys, focus. Do mental push-ups. So look at this. This is a simple chart. I haven't structured it because all my structured charts are on the Twitter feed. Here is Cody, Bill Miller's thing. We were buying it here in that $7 range. The stock was up 34% or something crazy. Does it look like a stock's just going to collapse and burn? Because right now, what it's doing is enter the gap zone. The gap, the dreaded gap, where the shorts go to die. $10.36. It's just about to enter the gap zone. Nothing to say. It's a $7 stock, guys. You can buy these calls at 30 cents, 40 cents. Back to the markets. So here we are. Hourly chart, nothing to explain. This is more visual. This is telling me a couple of things from a pattern symmetry standpoint. Somebody should be able to answer this. What is this pattern? Quick, guys. I don't have all night. What is this pattern? Other than flipping a birdie. What is this pattern?
Head and shoulders.
Thanks, Tom. So that's the head and shoulders, guys. And all of you guys should know this like the back of your hand. All right? That's a head and shoulders. So we're still on the hourly on a head and shoulders pattern. So that means we have to traverse or decimate the right shoulder, which is the neckline. This is the right shoulder, left shoulder, right shoulder. Once it breaks out, it's going to move fast and furious. 27.15 to 27.37 is 20 points. On the S&Ps, that's 140 points in the Dow. It's going to get there fast. You don't need to be an algo fanatic. You just need to follow the charts. But if it hits here, it can fall, because that's what a head and shoulder normally does. If it fails at the right shoulder, because this is the left shoulder. Look how symmetrical it is. I've drawn it for you guys. Look, left shoulder, right shoulder. So we could go up 10 S&P points from where we are right now. This is live. And then rejection at the shoulder, in which case we're back to this level again. You can short this a little bit. As long as we are within these red lines here, this is known as the Consolidation Channel, we could go as low as 26.60. If crap really hits the fan with the government shutdown crap that's going on, and this whole fiasco with the border wall stuff and everything, it's heavy-duty politics going on in a big way, then we are going to go to 26.60. That means we're going to fall from here, try to hold here, and then if we slip and slide, we could fall 320 points on the Dow. And the media is just going to be like, oh my God, we're down 320 points. The world is over. But we have multiple supports on the way. We have a huge breakout that occurred. So we can come back and test that. The possibility is there. That's the reason why this is a 1 hour chart. It's not 15-minute candles. Each of these candles are 4 15 minutes. That you guys all know. There are 4 15-minute segments in 1 hour. Right? There you go. So this is a much cleaner chart to look at. Let's look at some daily charts and I'm going to wrap up. And I've been showing this repeatedly, so I just want to walk people through it. Real simple. This is your SPY, the spider. This is where the world ended. And we were supposed to go to Armageddon. No, it didn't really end, did it? The market turned on the 26th of December. Please review my videos, scroll through the Twitter feed, look what we're doing then. We were selectively buying. And we're dead right. And so now we're here. So this is your rising channel. We fell below it, and we are now creating a green hammer. Does this guarantee that we're going to break above this massive downtrend line again? There are no guarantees. But if it does, this is where the tricky part is, because the stuff going on this week. But if it does, we're going to move real fast and furious to 274, 275 on the SPYs. My gut tells me, this is just a gut feeling, not a technical feeling, that they are going to somehow work out something on the government side. The market will move higher, move to this level. There will be a sell program waiting here. That's the reason why I have a red arrow. So if you're trading SPYs, straight this chart. Now, this is on a swing perspective. It cuts out the intraday noise. So far, there has been no real technical damage, but if I see that these stochastics break below this blue line here that I drew for you guys, and it's visual, if it breaks below that, then that means the market will most probably fall into the, and if the market falls 10 points, that's basically 600 points on the Dow. Easy. Everyone's going to think the world ends again. No, market's going to bounce from here, because that's a major critical support. Also happens to be the lower Bollinger. So the way you read the daily charts is, where are the Bollingers? The arrows obviously are there to help you guys as much as you can. And here's your neckline right there, because this market went like this. There's your inverse head and shoulder with the head, left shoulder, right shoulder, neckline. Here's your neckline. First neckline right there. Second neckline. We hit that. We broke over that. Hit the downtrend line. And now we're here. Technical analysis is not that hard. You just have to understand that at each of these major inflection levels, there's going to be buyers or sellers. This ain't mom and pop. There's going to be big institutional programs that are going to be running the machines, buying and selling. So our charts are showing you where they will buy and sell. So far, so good. We're monitoring it. And that's your daily chart. So there's turbulence ahead. A little bit. That's a very nice green candle. Nothing to get too excited about, but it's good. It's not a blood red candle saying we're going to wake up tomorrow morning all the way down here, but anything can happen overnight. I don't know. The chart that basically tells us what is happening with the overall market is actually quite bullish. That is a crossover here on the MACD. Histograms going positive. I said that way before it went positive. Why? Because I started to see the histogram shrink. That was off the bottom right after Christmas. You started to see the histogram shrink every week. Now, every week is a long time, right? So end of the week or during the week, then I post this chart. Take a look at it. Is it shrinking? Once it starts shrinking, it goes positive. That's the reason the market has had this humongous rally. You don't need to be a Goldman Sachs technical analyst who's wrong 90% of the time to figure this out. Just do this in your home. Track my charts, put them on your own screen, do it yourself. It really is not that hard. What's hard is managing the daily trades intraday. But you got to keep an eye on this so you know you're not completely out of the market. So this is still expanding. Now, will it be endlessly expanding, these histograms all the way like this? No. I say we have 2 more weeks before the market takes a nice dump. Right after Valentine's Day. So this is giving me an early warning signal. It's not even giving me a warning. It's saying I want to go higher, and we could easily go to 2,800. I've shown that repeatedly on my Twitter feed. I do not want to waste my time or energy explaining all that. It's on my Twitter feed with comments. So we have first level of resistance at 2760. These are nice numbers. 50 points from here. What's 50 S&P points from here on the Dow? And please, not you, Tom. You've been around, okay? What's 50 S&P points translated as on the Dow Jones Industrial Average? What's the conversion? Drew, please type it in next to your muscle push-ups. Please, what's 50 S&P points on the Dow Jones Industrial Average? I explained the conversion rate before. I don't know. Are you listening to what I'm saying tonight? I at least said it repeatedly. Drew, don't take me the wrong way, but I'm not sure what's going on. I repeatedly said, and if you don't remember, why don't you write it down? That every S&P point, SPX point, is roughly 6 to 7 Dow points. So 50 S&P points is roughly 300 to 350 points. I'm trying to help you, brother. That's all. All right? So that's all. So one S&P point is 6 to 7 Dow points. 50 S&P points, simple math, is 300 to 350 points. You have to remember that because that'll help you manage your trades. So if we move from here to the next level of resistance that I'm showing here, and please, Drew, write it down this time. Okay, so this first line here that I drew, not your name, but I actually drew this line, is 227.67. So you do the math. We're at 27.05 where we closed at 27.07. If we get 60 points, we basically have another 300 points on the Dow before again we might get a sell-off. Final resolution is basically 2800. That's a long way off. So far it's cooperating. So far this is cooperating. We're good to go. Finally, the monthly chart. The monthly chart overall is, again, slightly mixed signals because we are approaching some major resistance. One major resistance is this uptrend line that goes back to 2009, the ultimate generational low in the market. So here's your lower channel. Here's your upper channel. We're approaching that upper channel, which happens to be, again, that 2760 level. What does that mean? It simply means at this point, upper channel, you can see that we're gonna hit a roadblock. Can it bust a move out here and get to the 2800? Sure it can. A good China sort of trade talks and stuff, some positive thing, we can move real fast. But first we have roughly 300 points more, and then we hit some turbulence. Because once you get above the upper channel, technically speaking, we can hit over a month or two new highs. We can. So but it's not going to be a straight line. We have this level to take out, which is 300 points from here, and over 600 points. We have a major inflection point, which is shown in the form of this blood red, ugly candle that started on the 3rd of December. So once it gets there, that's why I have the red arrow here, which is 600 points from where we are right now, or so, something like that. 600 points, yes. From on the Dow Jones Industrial Average, that was what so many people got trapped, and that was 1 month of bloodletting, right? For a lot of fund managers, 1 month of genocide. Like they were just like, wow, the world ended. So obviously, once it gets there, that's resistance. There's going to be selling there. That's it. Now I'm going to open up for a couple of quick questions. Anyone wants to see any stock? We got to wrap up. It's 10 o'clock right now. Wow, it's 10 o'clock? I've already gone an hour and a half. Okay, please. Any stock anyone wants to see? This is your chance. Not that I don't give a chance. I'm showing charts all the time. Please, go ahead. PCG. The wrong answer that all of you gave me. So, PCG is attempting. So far, it's good. It needs volume. See the volume here? Sucks. It needs volume bars like this. So internally, it's good. This is staying above 80. It's looking good. There's full stochastics. The MACD looks really good. Nice crossover, and it's continuing above 0. This is nice. Volume lacking. They're waiting for some judge to approve their bankruptcy plan or this and that. But technically, a 50-day move to 18 would be a shitload of money on excuse my French, for cheap calls, for cheap lottos. I would say that once it goes over 15, that 1581 means a double or more than a double on these lottos. So I would keep on buying time. I would buy the March, give the company time to do what they need to do. So this is overall looking good. It's a distressed reversal trade. It's a distressed play. Remember, the stock was $49. This PG&E, PCG, the symbol. This is the California utility company, electric company, and all the wildfires and stuff, So that's it. Krone, yes, Krone has a phenomenal chart. One of our traders had put it out there. So daily shows massive selling right here. Okay, so this I'm starting with the daily chart. One of our members, Paul Willett, had mentioned this stock. I put it out there at around 14 and change, and the stock basically exploded over time. So daily shows massive selling. This is not a good sign. That is almost a bearish engulfing candle, which means the support level is around the 1873 level right there, a dollar or so below where we are right now. But if it breaks that, the stock will hit 17 really fast. That's the daily. Let's take a look at the weekly. This is your weekly. Not good either. Why? We have a massive inverted hammer right there. A hammer falling on your head. That means some fund out there and some hedge funds said, bye-bye on Kronos for now. We're going to buy it more around the 17 level. Nothing too bad. This is uptrend line. It just moved too fast, too far away from the 5-week moving average. That's the yellow line. Remember, that's always the 5 line. So when I say week, that means 5 week. It is also the standard deviation from the 50 and the 34-day moving average is absolutely, and I'm just talking technicals. Okay? I'm just talking technicals. You guys probably know more about the fundamentals on Kronos and stuff. So bottom line is this is a wide deviation. This is the highways the stock should normally travel at with some sort of movement higher. But from here to here, so this is on a weekly basis not good. Nothing wrong. I'm just giving you technical stuff. This is a technical buy level because every time it's hugged the 5-week moving average. I don't make this up. You can see it yourself. This is a huge sell program, one of the highest volumes detected, and you can take a look at it right there. That's 200 and almost 230 million or 224 million shares. A million shares. Somebody dumped. Is that good or bad? A bullish guy long on Kronos will say it's good. That means the sellers finally got out. I say not yet. Give it a little bit of time. Yes, it's going to move 50, 60 cents back and forth. But on the weekly, it's telling you that there is more selling to come. On the daily, it's telling you that it is, but again, this is a pot stock, so they move in different ways. But even the daily, this candle's not good. What's also not good is this. The full stochastics now have crossed over down. It looks like it wants to reset down here, which would be a good buying opportunity. Here is something else you got to watch. The MACD. All of you have these guys. All the stuff you guys have on your screens, okay? On your platforms that you use. The MACD is starting to, it got really overstretched. And now it's starting to buckle down. If the MACD crosses below this line, you have a crossover like this, the stock will pull back to that 15 to 16 and the $17 level. So that's Kronos. Now, intraday, you can trade as much as you want because that's an hourly chart. You can buy it here. Boom, it's going. It can bounce up to 22. So that's just the take. So nothing really devastating, but somebody got out of it in a hurry. It's a lot of pressure that came through last week, and that's where we are. JB, you want to see any stock? No? Okay, I got to wrap up. It's 10 o'clock. All right, guys, listen. I respect everybody. I respect people who are more disciplined, more focused, more. You guys are all good people. This is not an easy market. This is not a very difficult market. It's got a lot of volatility, which is the difficulty during the day. My best suggestion would be look at the varied selections that I'm putting through. Buy breakaway momentums like the EAs, the Grubs, the Yelps, those type of stocks, the ELs. We have earnings still continuing. I'm offering earnings baskets where you can buy a bunch of them, one call each, so that you don't blow up on one side or another. We have huge earnings winners under the plate, lots of them. We have small biotech stocks that I've shown, which are beautiful charts, beautiful setups. Like look at this on the daily. That's a great setup. Like you look at this. In the old days when we didn't have algos and HFTs, fund managers would be like, what the hell? I'm buying the crap out of it. This is a breakaway. This is Array Pharmaceutical. There's options on those, $1, $2, $2.50. Great stuff to buy month or 2 months out. This is a beautiful chart. This is a massive breakout. Look at this. Look at the cup. Old days, they used to say the width, I mean the depth of the range or the cup, it's like a cup and handle, right? Here's your cup. The depth of the cup was how much? $20, 15. That's $7. I'm sorry. The depth of the cup is 7. So they say add that to the breakout level, the stock's going to 27. Do you know what a $2 call can do if a stock goes up $7? Now let's take a look at the weekly. Still good. It's making all-time highs. Stock that make all-time highs go higher. It's a law of physical momentum. That means new money getting in. The guys who basically got clobbered at these levels, they're out. That's the reason why the stock stayed between 18 and 20. That resistance is now broken. It's free to go. I have beautiful charts on this also on my Twitter feed, structured with all the lines and all that stuff. This is a stock I'd stay with. So these examples are all there. I don't have all night to explain to everybody. Now, Clovis to me is a massive reversal play. This is a stock that I've shown many times. And some of you will jump in and buy it when I'm selling it. I can assure you that. Because right now, it doesn't excite too many people. It excites me because this is where we are. Show it to your kids, guys. All right, if you have kids. Just show it to anybody. Show it to grandma and say, would you buy this? Look at this pattern. Is it going to do this? Whew, in that case, you just made yourself, $1 million. In due time, it probably will. In due time, it will. But at least for here, this is an option that's at $1.70. We sold them from $1.20 to $2. Then even the ones which were the 26 calls. Look, I don't want to keep on repeating myself, which I already do. This noise that you're seeing, that's one of our, and he's a very elderly gentleman, Jody G. He's out there liking all this posts. You know why? Because he's doing the trades and making money. That's why you're hearing the ticks, because that's like the Twitter thing saying like who's liking it. This gentleman, my hat's off to him. He's a granddad. He's a patriot. He's a God-fearing person, and he trades the heck out of things. He's not even a crazy risk taker. Jody G. My hat's off. You ask him if he did EA or Grub, I bet you he did. I bet you he did 1 call or 2 calls. Have a great evening, guys. I love you all, but honestly, earn the respect of the markets. Stop personalizing your losses. Read some of the things that I put out there. Fortify your mind. Muscle push-ups, mental muscle push-ups will make you a lot of money. Physical muscle push-ups will help you carry a heavy computer. Okay? How about that? Have a great evening. I look forward to seeing you guys this week. Let's make it happen. Good night.